What's up, strategists? Welcome to the Bitcoin strategy. Today I want to talk about Bitcoin and its many functions that make it an upgrade to gold as a store of value, simply true savings, and which I will explain later, why it will be more valuable than gold in terms of market cap, and how Bitcoin can fix our paper inflation globally, or our US dollars, euro inflation globally. Now, before I get into that, I want to congratulate all gold holders out there for relentlessly holding your shiny yellow bars for years and years on end until it finally flicked the switch and started acting as a hedge against the US dollar again, rising in value. We can see that over here on the chart if I pulled it up right here. Restore. You can see here that gold has rallied all the way up to 3,000. If you can see it on the chart, I'll zoom in a bit. You can see 3,000 on the right of the screen right here. 3,000. So gold has hit 3,000. And this, I noticed this when I woke up actually. I noticed gold struck a new all-time high of $3,000 per ounce and even managed to get a picture of it before it dropped down to $29.80. But anyways, enough about the old. Let's talk about the new. Bitcoin, Gold 2.0. Many of us in the Bitcoin community have a saying when it comes to explaining what Bitcoin is to the average Joe. That is, Bitcoin is digital gold. While I believe it's a good phrase, I like to go a step further and say that Bitcoin is gold 2.0. Why? Because it truly encapsulates the essence of what Bitcoin is. Bitcoin is easily verifiable from the fakes, unlike gold. Bitcoin is easy to move around, unlike gold. Bitcoin has a cap supply, unlike gold. I put this in bold. Bitcoin can be used as a modern day payment network, unlike gold, replacing Visa, MasterCard, the dollar, all of that stuff. Bitcoin can do it more efficiently without inflation or heavy inflation and more predictable inflation. Bitcoin has a hard-coded supply distribution, unlike gold. Bitcoin is nearly impossible to seize, unlike gold, and so on and so on. I could write an entire book on how Bitcoin is better than gold. I will be talking about the main points of gold in this video, what makes it good, and how Bitcoin improves on that. But if you want more comparisons on why Bitcoin is better than gold, and frankly every asset on earth, Bitcoin is better than everything on this earth. Be sure to stay tuned by giving this channel a sub, because I will be talking more and more and more about how Bitcoin is better than real estate, for example, other coins on the market, silver. I'll be doing comparisons for all of that. Now, Bitcoin, a better store of value. Bitcoin, the ultimate savings account. First, if you don't know what a store of value is, let me explain it to you. A store of value is an asset that holds value over time. So think of real estate that appreciates in value, so it holds value over time. Rare art, gold, and even Bitcoin. Real stores of value should be able to retain its value over time, beating inflation, and provide a safe haven for people among economic uncertainty, like during the 2008 recession. So if I put my money in gold, like if I put $100 in gold, it should still be $100 after the recession. A savings account with your bank isn't a form of store value, as the dollars within it get inflated away by the US government at a rate of, on average, 8.2% a year, while your bank gives you minuscule interest rates on your money every year. It's like 0.3%, 0.025, some very low. It's like nothing. This means that 8% of your money is lost every year due to inflation, so you can buy less with the money you already have. $100 could buy way more years ago, but now you can't buy much with it compared to years ago. But if we look at this chart right here, you can look this up. It's a website called tradingview.com. And right here in the top left, you can type in USM2, or you should just be able to start typing and this should show up. So you want to select USM2. This is the amount of dollars in circulation. This is the M2 money supply. And what I'm going to do here is I'm going to go 5 years back in time. We'll say January of 2015. I'm using the measuring tool, and we're going to drag up to where we are at now, January 2025. That's 82.29%, as you can see up here. Let me see if I can annotate that. Up here, 82.29%. That's where I got the 8.2% annual inflation rate. So this is over 10 years. So I just took 82.29, divide that by 10. That's how much the inflation is on average over the past 10 years. So 8% of your money is gone every year. Now, the US dollar is not the only one with an inflation rate. Gold has an inflation rate of 1.5% a year, and Bitcoin has an even lower interest rate than that. It's like half, 0.84% a year, and it keeps getting lower. Bitcoin's keeps getting lower and lower and lower and lower every 4 years. As we can see here, this is where I got the 1.5% interest rate from gold. This is from Lynn Alden. If you don't know Lynn Alden, she wrote a book on how our financial system is broken. I've heard it's a good book, never read it, but that's who this is. So pretty credible source, 1.5%. There's a chart here if you want to read it or if you want to analyze it. And then for Bitcoin's inflation, I went to a website called Clark Moody Bitcoin dashboard. If you're on computer, what you can do, you can type in Control F, and you're gonna type in unrealized, or no, inflation. Yeah, forward monetary inflation. I'm gonna zoom in. It's under economics. It's at the bottom right here, forward monetary inflation. That is Bitcoin's inflation rate currently. This is the realized monetary inflation one is at the moment. The forward monetary inflation is what it will be as the as time continues. And I'll explain more in depth what that means later. Anyways, for these assets to be considered a store of value, Bitcoin and gold, it needs to outperform your local currency's inflation rate. In this case, the dollar, which we mentioned, it inflates at 8.2% a year, and gold and Bitcoin need to outperform its own inflation rate too. So 0.84% for gold, we'll say together that's roughly 9% inflation on gold. Now, if we look at the charts here on gold, we'll say in the past year, let's see how much gold went up. We'll count 2024 January to 2025 January. So same thing, measuring tool. I'm taking January 1st, bringing it over to January 25. And gold went up about 27%. So it did beat inflation. And for Bitcoin, it did the same thing. If we take our measuring tool, go to January 1st, I didn't select it, January 1st, go all the way up to January 2025, that's 123% gain. So Bitcoin is definitely the better option here. It went up like 5 times more than gold, but both Bitcoin and gold do pass the checks. What makes Bitcoin better, however, is that it has a capped, verifiable supply with a hard-coded growth strategy, which makes it more scarce than gold and more predictable than gold. Gold, NASA, I remember NASA once put up a news article. They found like $1 quadrillion worth of gold up in space. That's not very predictable. Like humans years ago couldn't have predicted that an asteroid would have this much gold in it. Bitcoin, you know how much supply will be issued, when it will be issued, and how much of it will be issued. Verifiability. Don't trust, verify. That's a saying we use. Another saying we use, don't trust, verify, which means make sure to verify it yourself. Just don't trust the process. For example, when you send a card payment to a vendor, you're trusting that Visa sends that information to your bank, transmit it to the recipient's bank, which is the vendor, the shop you're buying from, and send it to their bank account. Now, you're trusting Visa to do all this process ethically, and they're not cheating anyone out in between. That's a trust-based system. Bitcoin, you can actually go on chain. It's like a digital ledger. We call it the blockchain. And you can see all the transactions, what's confirmed, what's on there. And I can show you that right now. But before that, really quick, I got a couple of memes here to show what this means visually. Now, this is a guy at a bank. He's saying, I'm here to get permission to use my own money, because that's how banks work. They could seize your bank account. They could freeze it. You don't own your money in your bank account. The bank does. And that is that. Now, onto this. This is a crypto company, Coinbase. They like to freeze accounts. We see this a lot on Twitter. This is from an ETH bro. He got his account frozen as he was trying to withdraw from Coinbase. That's another thing you want to watch out for. Giving too much control over your Bitcoin, or if you do crypto, which you shouldn't, but if you do, not giving that much control to a third party like this. And this is the average Coinbase response. They say contact us up here to activate the account again. When you contact them, this is what happens. They say, this is a Coinbase representative. Was your issue resolved? They say no. And the Coinbase representative, even though the person said no, they said thank you, and they closed the chat. Now, I've used Coinbase before, and that is truly the experience of trying to contact their support. It's crazy. It's terrible. They do not have good support. Another one, this is from Bitcoin Teddy over on X. My bank account notified me that my transaction was approved today. Okay. My Bitcoin wallet notified me that a transaction was confirmed today. Don't trust, verify. Make sure that your transaction is actually going through. Now, what this looks like, this is the blockchain. It's like the open ledger I was talking about. Now, ignore all this information on the screen. I know it's a lot of information, but if we look right here where this green bar is, let me circle it right here in red, 67 confirmations. So that means the transaction was looked over 67 times, and that means that the transaction is legitimate. You verified that the transaction was legitimate. With gold, you have to analyze it, maybe put it in some fluid, or do a scratch test. Whatever they do to verify if gold is real, they have to go through a big process in order to find out if it's real. Now, with Bitcoin, you just send a transaction, wait for it to get a confirmation, and that's it. There's no having to analyze the gold, no, nothing like that. Just wait for a confirmation. Takes about 10 minutes, and you'll be on your way. Now, onto the predictable supply distribution I was talking about. We'll go back to the Clark Moody Bitcoin dashboard real quick. And again, you could do this by yourself. We're going to search Control F to search. This time we're searching up money supply. This is how much Bitcoin is in circulation, around 19,800,000 Bitcoin in circulation, and that's about 95% of the total supply. And we are going to look at the block subsidy. The block subsidy is how much Bitcoin is put into the supply every 10 minutes. So currently, 3.13 bitcoins are put into the supply every 10 minutes. I have a table for this if you want to look over it. But basically, to break this table down simply, an epoch is a period of time, like as you can see here, 2009 to 2012. Epoch 2 was 2012 to 2016. And in 2012 to 2016, each block gave 25 Bitcoin. We're now at 3.125 Bitcoin. So you can see it dramatically drops down as time goes. The inflation is cut in half every 4 years. Halvings will happen approximately every 210,000 blocks, or roughly every 4 years. There will be 32 halvings, each having the subsidy, which is the supply issued every epoch. And the epoch is every time period. When a halving occurs, the subsidy is cut in half, drastically slashing inflation, and around 95% of the total Bitcoin supply has already been mined. Now, this is good. As more Bitcoin gets mined, the price will move up relative to currencies like the dollar, because the more that we mine it, the less inflated it will get over time, because the inflation cuts in half every 4 years. But this is how money should traditionally be. Everything is supposed to get cheaper relative to the money we're using, like the euro or dollar, but our governments inflate it past the point where everything becomes expensive relative to it. Think of all the times companies spent making their cars more efficient and cheaper for the consumer, going from building them in place to Henry Ford's first assembly line, for example. Think of computers that have made our lives much easier in the past few decades. Shouldn't that make goods cheaper due to the aided process of computers? It aids us, but goods aren't cheaper still? That doesn't really make sense. To track what epoch and block we're currently in without any crazy charts and not looking at Clark Moody Bitcoin dashboard if that's too much for you, there's a website called Time Chain Calendar where you can find all of this information on a beautifully handcrafted web page. So right here, this is Time Chain Sats. As you can see in the top left, we got the epoch. We're currently in epoch 5. We got the block we're in. So right now, 888,146. They give you the price up here. They give you the market cap, how much money is put into Bitcoin, and a lot more. Oh, you got the subsidy over here too. So you could track all this real time yourself if you want to by going to Time Chain Calendar. It's a pretty good website. Now, in short, I got some Bitcoiner geek terms to remember for you. Now, a Bitcoiner is a person like me who fully understands Bitcoin and has a deep support for it based on hours upon hours of research. An epoch is a unit to measure time periods, for example, 2024 to 2028 or 2016 to 2020. A halving is an event in Bitcoin land where the epoch subsidy gets halved, for example, 50 Bitcoin to 25 Bitcoin. And the subsidy is the reward given to miners. It can be on a per block basis, which it usually is, or you can use it as epoch subsidy, which is that every 4 year time frame, like 50 Bitcoin to 25, as you can see in the chart. This is epoch 1, 50 Bitcoin, epoch 2, 25, 3, 1, 12.5. And a subsidy that's not an epoch subsidy is like, as we can see on this Time Chain Sats right here, subsidy 3.125. That's what miners make every 10 minutes. Now I got a quick quote from Buffett. Risk comes from not knowing what you're doing. So if you're going into Bitcoin thinking you want to make a quick buck, don't do it, because it's not going to work out for you, because you'll probably get lettuce hands and sell, which is not what you want, because trading strategies is not to buy high and sell low. That's not how you make money in the market. So Further educating yourself about Bitcoin and the market around it will solidify your conviction against it, and maybe you'll turn one of us a Bitcoiner. Now, if you enjoyed this content, feel free to like, comment, or even subscribe. It's very much appreciated. And as always, stay orange pilling, stack sats, and have a great rest of your day.